Hello, this is Pat Walker at MissionWinners.com. I'm making a video right here. This one's for Eric. Eric, he asked a great question and I appreciate it. Here's Eric's question. By the way, I'll only give first names, never last names. We don't do that. We're very discreet, very important. You often tweet that you're making adjustments to your alerts. Can you tell us some more about this process? And that's a great question. So let's do a couple of real-world examples. Right here, we're taking a look at QLD. So we have an alert on it taking out these highs. This is the daily chart. And right here, if you take a look, you see that little green slash line? That's the price alert. It is not a buy stop or a sell stop. It's the price alert. So you can say, well, there it is right there. It's just taking out the previous day's highs. What I do during the day, though, is this. On QLD, I'll take it down to the hourly chart and see if I need to fine-tune that alert. By the way, I don't do this 20, 50 times during the day, just a couple times during the day to help make for more precise entries. So you can see where the alert is set basically at these highs on this bar. But now we've got slightly lower bars. I'm going to take it down to see this right here? Here's the 30-minute chart. So what am I going to do? Drop my alert some. Now, do I put it right at the high? No. This is a great trick for all of us. Put your alert a little bit below the trigger price. That way, you can look at it and see if volume's coming into it. So there's one example. Let's see if we can find another one. Let's go back to the day chart. SSO, Apple. Okay, let's look at Apple. I don't think I've changed this alert today. Here's the day chart. Go back to it. And you can see where the alerts are right there, related to yesterday's high. Yesterday's high was 175. Let's just take it down to the hourly. And we can say, nope, I've kept the alert at the same spot. Now that it's traded a while, I'll drop my alert a little bit. You can say, why will you do that? If it starts to run, it will give me time to watch it and see if it's approaching the pivot of 175, is volume coming into it? So I dropped it a little bit. Let's see if we got another example here, okay? Let me go back to the day chart. I'm always looking at the day chart first, okay? Here's one. Adobe triggered this morning, but let's do something good. Let's take it down to the hourly chart. This is the first bar. This is an hourly bar. It ran up, but look, it closed right close to the bottom half of its, or middle point of its range for the day. Nothing special. Take it to 8-minute. Look at this. Or 30-minute. Look at that. It runs up the first 30 minutes of the day and then gaps down. That ain't good. That's not what we want. You can take it down to 10-minute. I'm going to get rid of that right there. Look at this. I'm going to see, let's refresh this to make sure we're right. There you go. Runs up and they give it all back. What do? We watch the price action of the stock and we watch the price action of the indices. Like here's QLD. Look at QLD. When Adobe, which is a big NASDAQ stock, is going up, QLD right here, the first 10 minutes, was gapped down and dropping. Now it came back up, but notice this. This didn't take out yesterday's highs. That's a red flag, which made us cautious this morning. Let's see if we can get another example here. Here's Google. This is the day chart on Google. It went across these tops right here, and we had a limit alert set. Let's take it down to hourly, and you can see it did it right here and triggered. But I'd like to show you something, and I think there's a valuable lesson for all of us. It's easy to look back and say, oh, that would be easy to do. Here's the chart, just take out these highs and we can buy it. Take it down to a 10-minute chart and watch this. Here you go. It triggers right there. See this bar right here? And it goes up, and everybody's doing the happy dance. And then at 9:10 this morning, look at this bar. You give back all your, if you bought that right here at one time, you're down 5-6 points real quick. If you bought it up near here, you're down 8 points real quick. And you can say, yeah, but Pat, look, it came back. Folks, I'm going to share something with you. That's called investing through the rearview mirror. You buy up here, and then it comes down here. You don't know what it could just keep on falling. You say, well, I don't know. No, we don't know the future, but it sure did here. So we're always adjusting our alerts in light of what the current market action is doing. So I'm going to be real specific. I look at the day chart. and Deckers. I'll look at the day chart, and then periodically I will take it down to an hourly chart. Here's the hourly, and that's still relatively tight, and 30-minute. Now, let's do real world. This is Deckers right now as I'm filming this. What should we do with our limit, our price alert? Price alert, not buy stop, price alert. You see where it is right there? You can say, well, shucks. Why don't we drop it down near here so that if it starts to run back up, we'll know what to do. So we just go like this. We drop it just a little bit right to there. That way we're a little bit early. If it starts to turn and trigger, we can look at the chart and analyze if we want to do it enough. If we want to do it or not, buy it. That is why I'm always looking at the charts. That's also why I love to take stocks off the list. Why? Fewer is better. It improves our focus. So that's the way we manage it. Anyway, it's a great question, Eric. I thank you for asking. I hope it helps so that you can see and understand the thought process. Now, am I looking at a bunch of 5-minute charts and 2-minute? No, please. If you noticed, I didn't talk about any 5-minute charts today. Please try to not get wrapped up in 5-minute charts. Why? I'll show you something. And cut right to the chase here, so that we can ride. Well, this one's just starting, okay? Coop, entry right here. Just walking on up the moving average. Let it work. Salesforce.com, CRM, entry right here. Up over 10 points. Let it work. CyberArk, entry right there. Just let it work. Look, it's hitting highs for the move. What? Have I looked at an hourly chart on this today? Nah. 30-minute chart? Nah. Why? Don't need to. Just let it work. By the way, notice where I have my price alert. A little bit above yesterday's lows. That's all. Just to keep me alert. Doesn't mean I'm going to sell. No, but it helps keep me in line. Keys, note my price alert. A little bit below the 8-day. I'll stop there, but during the day, I look at the daily, and then I'll take it down to the hourly. Here's SSNC still working. Take it down to the hourly and adjust accordingly. And it helps me. Don't need to micromanage. And the other thing I love to do, sir, I love to take stocks off the key list. Why? It improves our focus. Anyway, I hope that helps, and I thank you. It's a great question. Thank you for asking. I appreciate it.